A Panama International Business Company (IBC) is a strategic corporate vehicle for international entrepreneurs seeking tax efficiency, asset protection, and operational flexibility. With Panama's territorial tax system, companies that earn income outside the country are exempt from local taxes. This, combined with strong confidentiality protections, minimal compliance requirements, and a streamlined incorporation process, makes Panama an attractive jurisdiction for offshore business formation. Entrepreneurs can use a Panama IBC for various purposes, including international trade, asset holding, e-commerce, consulting, and investment management. Since the company operates outside of Panama's domestic market, it is not subject to local corporate income tax, making it an ideal structure for global business. Panama's offshore corporate framework has been in place since 1927, modeled after Delaware corporate law to provide a business-friendly environment with minimal regulatory burdens. Over the years, Panama has adapted to global transparency standards while maintaining its appeal as an offshore hub. Key legal reforms have included Law 47 of 2013, which required bearer shares to be held by authorized custodians, thereby reducing anonymity risks. In 2015, Law 23 introduced stronger Know Your Customer (KYC) requirements, making it mandatory for resident agents to verify company ownership. Following the Panama Papers leak in 2016, further reforms were implemented, including the adoption of the Common Reporting Standard (CRS) and Law 52, which mandated that companies maintain accounting records. More recently, Law 129 of 2020 established a confidential beneficial owners registry, requiring companies to disclose their true owners to authorities. These regulations ensure compliance with international anti-money laundering (AML) standards while preserving the key advantages of incorporating in Panama. The requirements for establishing a Panama IBC are straightforward. The company must have at least one shareholder, who can be an individual or a corporate entity, and 3 directors, who can also be individuals or legal entities. Unlike many other jurisdictions, Panama requires that director names be publicly recorded, although nominee directors are available for those who wish to maintain privacy. Each company must also appoint a Panamanian resident agent, typically a lawyer or law firm, who serves as the company's registered representative. There is no minimum capital requirement, and shares can be issued in either registered or bearer form, with bearer shares subject to strict custodial regulations. The incorporation process involves filing articles of incorporation, which outline the company's purpose, structure, and governance details. Shareholders and directors must provide identification documents and complete KYC forms detailing their business activities and sources of funds. Once submitted, the incorporation process takes between 2 to 5 business days. A Panama IBC can engage in a wide range of business activities, including asset holding, international trade, consulting, e-commerce, and investment management. Many entrepreneurs use these companies to hold real estate, intellectual property, or stocks, as well as to facilitate cross-border transactions. However, there are restrictions on activities that require special licenses, such as banking, insurance, and fund management. Additionally, Panama IBCs cannot conduct business within Panama's domestic market without registering as a local entity and paying taxes on local earnings. Despite these restrictions, the broad scope of permitted international activities makes a Panama IBC a highly versatile corporate structure. Tax benefits are a key reason entrepreneurs choose a Panama IBC. Since the country operates under a territorial tax system, foreign income is exempt from corporate taxation. There is no withholding tax on dividends paid to foreign shareholders and no capital gains tax on offshore transactions. The only tax liability for a Panama IBC is an annual franchise tax of $300. Additionally, there are no mandatory annual tax filings for companies that do not earn income within Panama. However, companies must maintain accounting records and submit an annual financial summary to their resident agent. Non-compliance with accounting and reporting requirements can result in fines ranging from $5,000 to $100,000, along with the potential suspension of corporate status. When compared to other offshore jurisdictions, Panama holds distinct advantages. In contrast to the British Virgin Islands, BVI, and the Cayman Islands, Panama offers a well-developed local banking sector and does not require offshore companies to bank outside the jurisdiction. While BVI and Cayman follow a common law system, Panama operates under civil law with corporate regulations influenced by Delaware law, providing flexibility for business owners. Unlike European jurisdictions such as Malta and Cyprus, which impose corporate tax rates of 5 to 12.5% and require full financial reporting, Panama imposes no tax on foreign income and does not require public financial disclosures. This makes Panama an attractive jurisdiction for entrepreneurs who prefer minimal compliance obligations. The process of incorporating a Panama IBC is relatively simple and efficient. Entrepreneurs begin by selecting a unique company name, which must include a legal suffix such as INC, Corp Tantidu Praansi, or SA. A name availability check is conducted with the Panama Public Registry, after which the company's articles of incorporation are drafted and notarized. These articles outline key corporate details, including the company's purpose, share structure, directors, and registered agent. Once the necessary documents are submitted, the public registry processes the application within a few business days. After registration, the company receives a certificate of incorporation and can proceed with post-incorporation steps, such as obtaining a tax identification number, RUC, and opening a corporate bank account. Some banks require in-person verification, while others allow remote account opening, depending on the business profile and jurisdiction. The cost of setting up and maintaining a Panama IBC is relatively low compared to other offshore jurisdictions. The initial government fees include a one-time incorporation fee of approximately $250 to $300, along with the first annual franchise tax payment of $300. Additional costs include resident agent fees, which range from $250 to $500 per year, and optional nominee director services, which cost approximately $450 annually. Overall, the annual maintenance costs for a basic Panama IBC range between $600 and $1,000, making it an affordable offshore business structure. Despite increased global regulatory scrutiny, Panama remains a top choice for international entrepreneurs seeking a flexible and tax-efficient corporate structure. The combination of zero taxation on foreign income, strong asset protection laws, and a straightforward incorporation process makes it an ideal jurisdiction for offshore business operations. By complying with Panama's regulatory framework, maintaining proper accounting records, and meeting annual obligations, business owners can enjoy the benefits of a Panama IBC with minimal administrative burdens. With a well-established legal system and a reputation as a stable offshore jurisdiction, Panama continues to offer a compelling solution for global entrepreneurs looking to expand their international business footprint.